When Bitcoin dumps, what should traders do? Well, if you know anything about trading, you've certainly heard the expression buy low and sell high. Well, when do you know that it's a low that you should be buying and a high that you should be selling? And if it started to dump before you started to sell, should you still sell? You know that it's at the low. When do you know that you should not be selling? Because you don't want to sell low and buy high, unless you're in the business of losing money for whatever reason. So, if you trade Bitcoin and you use proper risk management and you understand the basics of trading, which are effectively take profits early and often, limit your losses, and don't be emotionally attached to your trades. If you know those three principles and you abide by them, then you'll know, frankly, price doesn't matter to traders. What matters is winning trades. And how do you ensure that you have a higher probability of winning trades? Well, you have to have greater confidence and less lack of confidence or less uncertainty in the moves. And how do you ensure that? Well, typically, if you are a professional trader or a full-time retail trader who knows what you're doing, which is actually very few people in the retail trading space, then you'll know that you need to actually trade using the relevant maths of trading. So what are the relevant maths of trading? Well, the measurements that we can do of the actual mean of returns, right? The returns themselves, returns of investment, that is. The volatility, which is the standard deviation of returns. The variance, which is just the spread of data around the mean, which is another way of saying the volatility, because that spread of data around the mean is the volatility. The entropy, right? Whether the asset is in a random walk or a trending move, you use entropy to find that out. And of course the direction, using correlation for the volatility and for the entropy. Those are ways to tell whether or not the asset is going up or down or sideways. And if you look at today's Bitcoin movements, April 2nd, 2024, it started the day off pretty much falling a little bit from the get-go, and within a few hours, a couple hours of the start of the day, of the daily candle that is, the price dropped almost 5% or so, a bit more than 5% before bouncing up to close that 4-hour candle, that first 4-hour candle, down around 4.5%. So, does that mean the bottom is in and it's going to bounce back to the moon now for the pre-halving crazy all-time high that so many people were touting in the last number of days? No, it doesn't necessarily mean that. If you look at the 4-hour, there's still plenty of juice to run down. If you look at the lower time frames, the 15 minutes, 5 minute, the 1 minute, of course you're going to see lots of moves up and down along the way. But if you look at the 4-hour or the daily or the 7-day, there's certainly plenty of room to run back down. But does it have to go all the way down to around 39K to where it would revert to the 30 power mean and the 3012 RMLR. No, it doesn't have to go there because it can happen anytime. It doesn't have to happen this week. You know, it's likely to happen probably between now and September. You might think, well, that's not very useful for trading. Correct. That's why we don't trade high time frames. We just look at the big picture to get a big picture idea of what's going on the big picture. And I'm telling you, the asset is in mean reversion on the 7-day, and very likely on the weekly as well. Even though it did not tap that third SD dev band to the upside on the weekly time frame, it did tap it on the 7-day about 4 weeks ago. So this is like the third or fourth week that it hasn't tapped it. Therefore, the asset is most likely in mean reversion. And it came real close on the weekly. It just didn't quite tap it. So it was close to 99.7%. To that 99.7% standard deviation band. But didn't quite touch it. But still, because that 7-day time frame did, I would posit that it's in mean reversion. And so far, well, it is demonstrating that it is in mean reversion, and so far it's to the downside. Now, does it have to continue to the downside? Can it go sideways from here or turn back up again and still be in mean reversion? Yes, it can. That's why we look at lower time frames. So how do you know when it's reached the bottom? Well, again, you would look at something like the 90-minute or 15-minute or whatever you have for kind of intraday scoping, whatever you want, whatever you prefer. You'll notice that there was a nice trending move to the downside on the 90-minute, on the 15-minute, of course many on the lower time frames during those moves down today. And you'll notice that when it's in trending moves, and you look at the correlation, it is highly directional, which means you can actually rely on the directional information of entropy and of variance as well as volatility. All these things will give you very accurate directional information. And what's more, if you see divergences on the returns oscillator, well, that's basically the best kind of divergence indicator there is, because what is it that you are looking for in a divergence? It's an imbalance between the returns and the price. It's nothing to do with imbalance between the so-called RSI or stochastics or whatever, right? It's the returns that matter. Tools like RSI and stochastics are not going to help you at all to find actually useful divergences, especially not on low time frame trades, right? Those are lagging information indicators, so they're not at all useful quick scalps to fill up as many buckets of liquidity as you can in a trading day. What does that mean? It means you need to be using leading information, the kind of which I've just spoken about, the mean, the returns, of variance, the volatility, all those things. You need to use leading information because that's how you can know what the actual probabilities are statistically, and you can quantify your edge, and you can calculate exactly what the probabilities are that the move will go up, down, or sideways. And so you should know by that whether or not your trades should be long or short, or whether you should stay out of the trade until an occurrence of opportunity occurs, or happens, and the trade is right to be had. So that is how I would suggest that you look at things like the dip. You know, is it as far as it will go? Well, the last I looked at the screen 10 minutes ago, 20 minutes ago, it was still very much capable of moving very nicely down. It doesn't mean it can't bounce up, because it came real close to touching the RMLR, the third standard deviation band to the downside on the RMLR on the 4-hour candle, but it did not quite touch it. That was on that big drop. It came real close, like within $100 or so, but it didn't touch it. So it could technically drop significantly lower, and I wouldn't be surprised to see the asset go to 60 or 50, or frankly even 39 if it did, to complete that RMLR mean reversion. But I don't think it necessarily has to go that far, and it could certainly turn around before then and still be in mean reversion, even if it keeps moving to the upside or sideways for a while. And like I said before many times, as we approach this halving, the smart money is going to take their profit, probably before or near the halving. And look, they did that about 2 weeks ago, a week ago, whenever it was at 73. Time flies and melds in together. And then they will scare a lot of people out with a little dump, as people already are starting to do. You get scared out. But the people who are all in, they're not going to get scared out right now, but a lot of the weaker hands certainly are. And at that point, when the price is low enough, smart money, first of all, the smart money knows to take their profits on their shorts, because they use the same VEPS information that we use at Alpha Trading. And when the time is right, they're going to buy. Right? So this is literally following to a T what I said was the high probability occurrence that would occur before the halving. And I said it could be that it shoots up crazy high and then dumps, versus shoots up to just above all-time highs and gets to new all-time highs, and it did, and then dumps, and it did. So this shouldn't be a surprise to anybody watching these videos. You should know very clearly this was a probable event, a highly probable event, and that when the dip is in, the smart money will begin to buy up the loose Bitcoins that are floating around again. Once the retail market has been scared out of it, they're not going to shake the whole market out probably, but they could. But it's probably not going to dip below that 39 level, and I doubt it'll even dip to below 40 necessarily. And even that would be a significant drop for a move before a halving, not because of the halving. It has really nothing to do with the halving, but because if you look at the volatility, right, and the entropy, you'll notice that the asset is looking very good across many indicators, even on high time frames like weekly. Yes, the asset is falling, and that's good for shorts. And yes, the asset will start to go sideways or back up, once that dip is fully realized by the bears, the people who are selling right now, right? So this is not a video to give you some kind of hopium or whatever. If you're a bear or if you're a bull, I don't care. I don't take sides like that, right? I don't care if the asset's moving up or down or sideways. I just care to be on the right side of the trades that I enter, and that's it. And enter them quickly and get out of them quickly with a little bucket full of liquidity after each trade, so that it's easy to move in and out of the markets, and rinse and repeat, so that it doesn't stop your flow of trading in the given day. Because we've seen all too often traders basically get analysis paralysis when they look at markets moving, and whenever the price is running up real high and they feel like they've missed it, they say, oh man, if only it would dip, I would buy it again. Well, here's an opportunity to monitor the markets closely and to see when it's done dipping, because it sure has been dipping, like 5%, 6%. That's not a lot. In Bitcoin land, that's actually very little. But if it takes, and if it goes another 20% dip, don't be surprised by that, right? Consider that this move to the upside has been more extreme than a lot of people thought. Well, that's because of the volatility, right? And people who look at historical patterns will say, well, we've never seen a all-time high before, halving before. Well, we have now. And I would argue that, well, obviously at the first halving, we had seen an all-time high by the time of the halving, because whatever the all-time high was before the first halving was the all-time high. But anyway, if you look at the, actual math that matters, and it's not the historical patterns, because patterns break, math doesn't, right? If you use proper maths to calculate the proper things in trading, and those are all available in the tools that we make available at Alpha Trading, right? All the maths are built into that. You don't have to calculate anything. You just have to know how to read the indicators and use them to trade. Well, then you can actually tell when the bottom is going to be, especially on the lower time frames. So if at any minute you ask me, is price going up, down, or sideways, well, I can tell you on that minute what it's likely to be. If any 4 hour, I can tell you what it's likely to be. If any daily, I can tell you what it's likely to be. But you should never take signals from people, because it's useless lagging information, right? You should learn how to read the charts and make your own trading decisions, and not try to watch some YouTube Jimmy channel where they tell you, oh yeah, it's this looks like a trading opportunity. No, learn how to read the charts yourself. If you're just looking for signals, you may as well throw darts at the board and just guess. You've got as good of a chance or better literally flipping a coin saying buy or sell, right? So keep that in mind, and happy trading. Oh, I forgot to mention, if you want to get the Alpha Trading indicators, you can get the free access to the Volatility Starter Kit of indicators by just going to alphatradinghq.com/discord and create a ticket in the request support channel. And that's, again, alphatradinghq.com/discord. Just create a ticket in the request support channel, request the free Volatility Starter Kit, and fill out the info. Just give your TradingView username so that you can get hooked up with those tools for free. They're yours for free as long as you're in the Discord. And you also get a free pre-populated chart with all those indicators on them. And you get free educational help. There's free educational material, how-to videos, tutorial videos on how to use them to trade. There's the live chats with other traders who are happy to answer questions. And we all use the same tools, so you won't get a million confusing answers, because we all know how to read them the same way. You can join in the live streams that are 5 days a week, and you can even ask questions in the live stream. It's not a one-way downstream thing where we just talk and you listen. It's interactive. You can engage in that. So again, alphatradinghq.com/discord, and that's it. Happy trading.